Did you know that NIO is a stock that has been catching the attention of many investors lately? People are trying to predict the future price of the stock, but it's not an easy task given the current macroeconomic conditions. NIO is just one of the many companies in the electric vehicle sector that have seen a decline in its valuation due to industry pressures, macroeconomic hurdles, and skepticism surrounding growth stocks. So in this video, we're going to unpack everything you need to know about what's going on with NIO and what experts predict about its stock. The good news for NIO is that things are looking up. Reports show that people are still buying their cars. NIO is also doing its best to make more cars, fix and supply chain problems, and develop new models. So if you're looking to invest, this could be a great opportunity for you. Analyst Vijay Rakesh from Mizuho has predicted a bright future for NIO stock, with great potential for daring investors. Rakesh has given the stock a buy rating and set a price target of $25. This may sound too good to be true, but promising signs make NIO worth considering for investors. Now, let's look at some facts. In March of 2023, NIO's sales of electric cars experienced a slight increase, but it was only by a margin of 4%. However, even a small increase is a positive development for the company. NIO upped their global deliveries in March, but the growth rate didn't quite hit the mark compared to last year's numbers. In fact, the number of cars delivered in February was actually higher. Despite this, they still managed to deliver 10,378 premium EVs, which is a 3.9% increase from the previous year. The sales results for NIO aren't particularly strong, even with new models and expanding to Europe. However, there's hope that things will get better later this year. NIO's crossover or SUV sales have gone down by 67% year over year, with only 3,203 units sold. On the other hand, electric sedan sales have improved greatly, with 7,175 units sold compared to only 163 units last year. Unfortunately, NIO no longer gives details about how many of each model were sold. They've delivered more than 31,000 electric vehicles, which is a 20% increase compared to last year. However, they experienced a 59% decline in crossover or SUV sales. But here's the deal. It's because they're shifting to next-gen vehicles, so this could just be a temporary setback. Moreover, NIO's network looks pretty impressive, with 1,339 battery swap stations, 1,285 fast charging stations, and 1,154 destination charging stations as of March 31. And they're not stopping there. NIO plans to install another 1,000 battery swap stations this year, bringing the total to over 2,300 by the end of 2023. Furthermore, NIO just unveiled the third-gen power swap station in China on March 28. Each one can handle up to 408 swaps per day, which is pretty impressive. The swapping of batteries is not just for long trips. It can also be used to upgrade the capacity of vehicles. Reports reveal that NIO is promoting the switch from a 70 or 75 kilowatt-hour battery to a 100 kilowatt-hour battery in China with a discount for customers. Under this system, NIO owns the batteries, and users pay a monthly fee to use their cars. Furthermore, NIO has just unveiled its latest ES6 model at the 2023 Shanghai Auto Show. NIO named their showcase at this year's Shanghai Auto Show New Episode to highlight their accomplishments and upcoming endeavors. The company featured 6 models utilizing its second-generation EV technology platform. The highlight of the exhibit was the smart electric all-round SUV ES6, which made its debut. But that's not all, as NIO also officially launched the 2023 ET7 electric flagship sedan at the event. The company had a lineup of new cars, including the ES8, EC7, ES7, and ET5 for people to check out. They also offered a chance to experience their innovative N-Box enhanced entertainment console and AR glasses with the EC7. In addition, the Chinese car manufacturer showcased the latest power swap station and 500 kilowatt power charger during the event. And now, let's talk about the potential value of NIO's stock in 2030. The value of NIO's stock in the future heavily depends on China's electric vehicle industry growth. If the market continues to expand at a significant rate, there's a possibility that NIO's share price could go up to $50 per share soon. Three critical elements suggest that NIO's stock has a bright future ahead. Firstly, being located in China, which has the world's biggest automobile market, provides massive potential for growth in the electric vehicle sector. Moreover, as China's economy reopens, it's anticipated that there will be a surge in EV demand. Next, NIO's ongoing innovation plays a big role in its achievements. Each year, they bring out at least one new car model, and their latest releases, the ET7 and ET5 sedans, have been a hit with customers, making up more than half of their monthly deliveries. NIO's cars are especially attractive to people with higher incomes who are less affected by economic ups and downs and more likely to stick with their purchasing habits. NIO's battery as a service subscription, which was introduced in August 2020, has been widely embraced by EV buyers. With this service, customers can swap, upgrade, and charge their batteries, get a discount on their initial purchase, and generate recurring subscription revenue for NIO. But there are some obstacles. Chinese supply chain issues are limiting NIO's efforts to expand production. Despite the management's target of delivering up to 250,000 EVs this year, the company is currently on course to deliver around 40,000 EVs in Q1, which is equivalent to an annual run rate of 160,000. But before we continue, we want to thank you for watching this far. But let's talk more about NIO stock. Now, investors are worried about EV stocks, and growth-dependent stocks are not popular due to market uncertainties. As a result, when the company released its Q4 earnings report and short-term guidance, the market didn't respond well. Even though NIO's vehicle revenue grew by around 60% compared to the previous year, it failed to meet its vehicle delivery target and reported a much bigger loss than anticipated. The company had to spend more on research and development, and manufacturing costs increased, leading to a more substantial loss. Consequently, the stock price fell after the earnings report. NIO has been experiencing net losses despite a massive increase in sales, from $2.5 billion to $7.1 billion. This means that the company is losing even more money for every sale. However, it's important to note that this might not be the entire picture, as NIO is laying the groundwork for future profitable years. Unfortunately, investors have yet to see compelling evidence of this, which has led to the stock's lackluster performance. NIO has faced challenges recently, but the bright spot is that their stock trades at a much lower price than usual. Over the past decade, NIO's price-to-sales ratio has ranged from 1.28 to 33.15, with an average of 5.19. Right now, the PS ratio is at 2.37. Looking back over the past 7 years, the PS ratio has fluctuated between 1.28 and 33.15, with an average of 5.19. This suggests that NIO stock might be undervalued compared to its historical values. NIO is currently underrated, but its future looks promising as it expands its business. This means that a recent dip in its stock price creates an excellent opportunity for investors to enter the market. While predicting the exact price of NIO stock is tough, one thing is clear: it's bound to increase soon. The stock has hit rock bottom, so the only direction it can go from here is up. So, do you think NIO stock will go up and recover this year? Let us know in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons as well. Now, if you want to know more news from NIO, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. See you next time.